we have to stay, at the forefront of innovation in the fintech industry. And 2025, for sure, tokenized deposits and stablecoins were definitely buzzwords. So at FinWise, we're very much exploring what we can do in that realm. And we're seeing a lot more outreach from fintechs in the stablecoin space.
Welcome to the Galileo Financial Technologies Podcast. I'm your host, Scott Henderson. We're here to delve into the thrilling world of fintech and banking, exploring the latest trends, innovations, and disruptions. Every episode features insightful chats with industry leaders and visionaries who are pushing the boundaries of finance and banking. Whether you're passionate about fintech, running a startup, leading a large bank, or just intrigued by financial technology, this podcast is your go-to source for staying ahead. Let's dive into the future of finance and banking together.
All right, so everyone who's listening with abject fascination, I can't look at my marketing folks because they'll make me laugh, but I'm here today with FinWise Bank. I'm Christiane Gennaro with Galileo, and I'm responsible for our sponsor bank and network strategic relationships. Been doing that with Galileo about 3.5 years. Before that, a long history in the industry, so all about payments and cards, etc. And today I've got two colleagues from FinWise. I'm going to let them introduce themselves, and then we'll get into it. Nick?
Christiane, so great to see you again. Thank you so much. We go way back, so I appreciate you having us on the podcast. I'm Nick Chiappetti with FinWise Bank, Vice President of FinTech Partnerships and Marketing, and I lead some of our strategic relationships with the folks in the industry. And I'll pass it over to Simon.
Christian, very nice to see you. I'm Simon Darches. I head up fintech products at FinWise Bank.
Great. Maybe one of you could just give a little bit of the history of the bank, just so our listeners hear about that, and then I will start with my questions.
All right. FinWise Bank, very small shop in Utah. We started in the early 2000s, and we're a very small community bank established in the suburbs of Salt Lake City. Around 2015, 2016 is when we decided to make a leap into banking as a service sponsorship world. It's been very successful ever since. We originally started with lending, and just a couple of years ago we've decided to expand to BIN sponsorship and payments. And payments is really where we've been spending a lot of our tech time lately. We've been working on setting up a payments hub for the past couple of years to be able to support new forms of fintech and fintechs that don't necessarily fall within the traditional lending and BIN sponsorship frameworks.
Great. So I have a paradigm that I may have shared with you before, and that I think of sponsor banks in two waves. The legacy banks who have been in this area for quite a while, and then probably about the time that you mentioned, 2015 or so, we started to get, and we still have today, banks entering the space. And I think about the legacy entrants, and then when I'm looking at new entrants, I'm talking to a lot of banks, and I think of them in kind of two categories, both those that are tech forward and reg savvy, and not that those two couldn't overlap, etc. But maybe you could talk a little bit about how FinWise is focused on being one or the other of both of those, tech forward, reg savvy, etc., and how you've approached that in your build out.
And Christian, I think there's a third category as well, and it's the banks that are seeing banking as a service as a gold mine and going into it without necessarily thinking it through.
Yeah.
And to your point, I think you have to be both tech savvy and reg savvy in 2025 to be able to support a banking as a service sponsorship offering. So what we've been doing at FinWise very much since the inception of the business line is be extremely focused on the compliance side of things. I think we're one of the first few banks that realized the importance of compliance, even though back in 2015, 2016, it was a little bit of the far west as it pertained to regulatory compliance in the context of fintech sponsorship. But we've realized that we had to set up the right compliance management system, that we had to set up the right team, that we could not entirely trust the word of the fintechs that we're working with, and it's not out of a lack of love, but it's just that we have to make sure that everything that they're doing and telling us they're doing is actually being performed up to regulatory expectations. So that's really how we've been thinking about the regulatory side, making sure that we have the right people in the right seats and making sure that we have the right amount of people in the right seats. In 2025, if I hear one more sponsor bank telling me, hey, I have one compliance officer for my entire business line, I think I'll lose it because it's just not feasible.
Yeah. And can I ask you, this is maybe the segue into technology, and I do hear you, you're right. I was talking about those banks that I like to focus on are those. But I know that compliance can be people heavy. I know a lot of banks clearly are investing and adding that. Can you talk a little bit about how maybe technology is also helping you on the compliance side?
Yeah, of course. Right at the beginning of the business line, we decided that we did not want to rely entirely on manual processes. Back in 2015, we very much focused on lending, as I said, right? That was the first foray of the bank in banking as a service. And at the time, if I look at the banks that were participating in that kind of offering, everything was being done manually. The loan files were being sent every day, and someone was sampling a few loans to make sure that the credit underwriting was being done correctly. We did not go that way. Right away, we stood up a lending platform that is fully API enabled to make sure that whenever we get a loan that the bank is supposed to fund and originate, that loan gets underwritten by the bank. If you're the lender of a loan, you're supposed to underwrite a loan, right? You're supposed to underwrite ahead of you funding that loan. So that's what we did, and that was a big ticket item for us to make sure that we stayed compliant as it pertains to lending regarding safety and soundness and even regulatory compliance. When you do everything through API, you accumulate all of that data in your database, and that makes testing a whole lot easier. Now, could we improve on the efficiency and use more tech to make sure that we automated some testing that we're not automating right now? 100%. But I would say that we're still very much at the forefront of how to use technology to support the regulatory standing of FinWise Bank.
Yeah, I would say as the bank went into BIN sponsorship and payments, it's not all about just what the bank's technology in-house is. It's who you partner with in the industry for compliance purposes. So you think about your processors and how compliant they can be. Galileo's a great instance of someone that's been so successful and compliant and oversight of their fintech partners and banks. And so there's companies like Themis and Sardine and some of the ones that you've seen in the industry. A lot of them are here today, actually. And they're also part and parcel to making sure that the ecosystem is withheld to a higher standard.
Yeah, and because tech savviness is not just being tech forward internally, right? It's to make sure that we understand the tech stacks of the partners that we're bringing to the table and that we're going to be working with, and also making sure that they have the right tech stack to support regulatory compliance and the activities that FinWise is sponsoring.
Yeah, that's actually a good segue, because I wanted to speak with you about how do you, I guess, first of all, who do you see in the marketplace today coming forward as potential clients? And then how do you evaluate a potential client and program to determine if it's somebody that you want to take on?
Yeah, so in terms of what we're focusing on right now, we're still very much focusing on lending. It's been the bank's specialty for the past 10 years. And now that we're entering the world of BIN sponsorship and payments, we're also looking for partnerships in those two fintech verticals. And in terms of how we look at a fintech, there's obviously a business standpoint to it. We want to make sure that we're dedicating the right resources to the right opportunities. The fintech industry is huge, so you want to make sure that you're placing the right bets in the right place. And we want to make sure that we're working with very compliant people. But we've also defined a very good implementation process. And Nick, you know it much better than I do.
We have. So I think it all started with identifying your ideal customer profile, sharing that out with your key partners, and making sure networks and processors and industry folks know what's the right fit for any given bank. So it may not be a good fit for FinWise, but it might be a good fit for another bank. For us, we implemented a third-party risk management process that was a little bit more solidified than maybe it was 10 years ago. So we're looking at not just who the company is, who their founders are, their financial sustainability, their runway, operational, do they have a unique business case that's different than what's out there in the market, really solves a problem and a need. And then we look at the program itself. So whether it's a lending program, consumer, commercial, whether it's a credit or debit or prepaid program construct, some sort of money movements. So we look at all of those things to see if it's a good fit for the bank. And that's a full process that goes in place, and that's before you even sign a term sheet, just to ensure that you've checked all your boxes, not from a regulatory standpoint, but really, is it going to be a good fit, and we're not going to waste each other's time. Because 5 years ago, startups were just getting in and banks were cutting corners, and we saw where that all landed. So now we're ensuring that if a fintech needs a home, if it's not FinWise, we find another bank that we'll introduce them to, because we want them to find a good home if it's a good fit, and raise the bar of the industry on these type of companies.
And I think the use case is very important. And Nick is making a very good point there. So for all the fintech founders who are listening to us, please make sure that your use case is actually relevant to the industry. We've seen, I think we're getting into a place where the industry is a little bit more mature, where we are not faced with that kind of conundrum as much as anymore as we did maybe 10 years ago, where everyone was trying to be so innovative to the point where it didn't make any sense. But yeah, it's definitely something that we look at FinWise. We want to make sure that the ethos of the fintech is aligned with the ethos that we have at the bank.
Right. And maybe I can ask you, the buzzwords this year on the conference circuit have definitely been AI, agentic commerce, stablecoin, digital assets, etc. Are you seeing those concepts either being exercised in some way in the use cases or the prospects that you're seeing? Maybe you can talk a little bit about that. If there's anything cool you could talk about, that would be good too.
Yeah, for sure. On the stablecoin side, I think where we're still struggling, right? And I think that is the position that a lot of banks are finding themselves in, is that the regulations are very new, right? We're still waiting on clarity on even some parts of the regulations that have been introduced. So it is making it a little bit hard to be so reg savvy and enter the stablecoins world right now. But that's not to say that it's not something that we're exploring. We have to stay at the forefront of innovation in the fintech industry, and 2025 for sure, tokenized deposits and stablecoins were definitely buzzwords. So at FinWise, we're very much exploring what we can do in that realm. And we're seeing a lot more outreach from fintechs in the stablecoin space looking to work with the bank. And what I will say is that stablecoins is a little bit hard in its own regard, just because we have to identify the right domestic use cases. Stablecoins makes a lot of sense as it pertains to cross-border, right? Like, I think we can all agree with that. The SWIFT network is antiquated. Everyone wants to do away with it. So stablecoins make sense. But domestically, does it really make sense when you have RTP, FedNow, Visa Direct, MasterCard Move? I'm not entirely sure. And so, again, to go back to Nick's point, the use case has to be there in addition to us being able to figure out the regulatory compliance aspect of it. Now, as it pertains to AI, though, entirely different beast. And I think, interestingly, I think AI became a buzzword because of ChatGPT, right? But AI has been in the industry for a decade. It may not have been called AI. I think it may have been called machine learning, but it was here. We're using it more and more. We're seeing the application of AI more and more in the products that we're offering. We have a couple of lending platforms that have been using AI for underwriting for a number of years. What's interesting is that our regulators are becoming more knowledgeable as it pertains to AI, right? So even though it's been in place at FinWise and at other banks for a number of years, we're just getting questions from our regulators on AI. And that's what is making AI a little bit interesting and in some ways a little bit tougher to deal with nowadays.
It's like, you didn't realize we've been doing this for 5 years?
Exactly.
So we're just calling it a different name. Yeah, I got you there. Nick, did you want to add to that, or in terms of what you're
No, I think Simon covered it perfectly. A lot of the program constructs we're seeing now are tied into stablecoins. Someday somebody will figure out the cross-border situation, because we've got so many programs that come to the banks right now, and none of the banks want to be the first ones to take on those risky cross-border programs, despite network incentives and everything else. But stablecoin could be that entrance into cross-border.
Gotcha.
And to be fair, a lot of fintechs have realized how to do cross-border using stablecoin.
Yeah.
It's just that no banks wants to touch it.
Yeah.
Because we are worried about how our regulators are going to react, because you can't help yourself but transpose what has been happening with regulators as it pertains to the SWIFT network and correspondent banking and all of those things to how they would react to stablecoin. And now throw in the word crypto and you have the recipe for disaster.
Exactly. Yeah, and I think that it is always a conundrum. In my role, I get a lot of questions. I actually even have this on our evaluation questionnaire, and Nick, you might remember this, hard to find a bank use cases. And that's, to your point, there are a lot of areas that we have a lot of interest from prospects, clients in terms of expanding, but I understand why, and I spend time explaining to my stakeholders why a bank might be cautious about taking on one of those use cases. A little bit chicken and the egg. The first one who does it right, I think, will be a beneficiary, but I think it does take a little bit of time. So
it does, and I think collectively we all want it to get there. It will get there at some point, but in the meantime, there's enough fintechs in the U.S. with pretty good use cases and ideas that we're trying to solve for their sponsorship. And so when you come to us with a very difficult international or cross-border crypto stablecoin play, it's just low on the list for banks right now to consider those based on the regulatory constraints. And I think we'll get there. We're just not quite there yet.
Yeah. Can you talking a little bit more about lending and use cases? Can you talk a little bit about what you are seeing? This has been on the stage for a while, BNPL. I'm wondering, was that a flash in the pan? Is that here to stay? Are there other types of interesting lending use cases, either on the commercial or the consumer side, that you're seeing?
Yeah, so BNPL is here to stay. to answer your first question, there's no doubt about it. And especially looking at the demographic adoption of BNPL, it's 100% here to stay. And I think every study that's looking at the potential growth of the industry agrees with that fact. I think what we're seeing in terms of changes in the unsecured consumer lending space is that consumers didn't have a choice but to go to a more traditional personal lender if they wanted to finance a big purchase, right? And so the process would be very cumbersome. They would have to go to a platform, apply for a loan, wait for the funds to be disbursed, and then only then could they make the purchase that they wanted to make or afford the service that they wanted to pay for. That is maybe a good note. Consumers do not lend for no reason. They always lend with something in mind, with a very specific financial goal in mind. And BNPL has solved for that. Right now, BNPL is completely available at the point of need or the point of sale. It is a much more streamlined experience. You don't have to wait for the funds to hit your account. Everything is done in the background for you, and you receive the goods or you receive the service that you're looking to finance. BNPL for sure here to stay. I think, will we see an evolution in regulation as it pertains to BNPL? Probably. It's been a little bit of, I wouldn't say the far west because it's been around for a while, so regulators have vetted the use case, but there are still some things that are not expected of BNPL that are expected of traditional lending that I think will end up changing.
So I have to ask, because you just teed that up really nicely, what about reporting to the bureaus and delinquency and non-payment? Because you did tee that up, so I got to ask you.
No, 100%. And that is a conversation that we have very often. BNPLs generally do not report.
Yes.
And unfortunately, what that creates is a very inaccurate financial picture of a customer. I think lenders and banks alike are trying to figure out ways to solve for that issue because it's not just BNPL, right? We're seeing that credit reporting is becoming more and more inaccurate as time goes. And I think that is partially why we're seeing the rise of cash flow underwriting. Historically, if you were looking at a customer credit report with all the flaws that we can put on FICO, you would have a decent picture of a customer's financial debts. Now in the world of cash advances that are not reported on credit bureaus, in the world of BNPLs that are not reported on credit bureaus, you actually cannot entirely rely on a credit report to conduct your underwriting. So that is why we're seeing such a big push in cash flow underwriting. I think generally speaking, when we speak about cash flow underwriting, people have in mind that it's a nice way to get customers in that have a thin file or don't have a credit score. But that's not, yes, sure, it is an advantage of cash flow underwriting, but the biggest advantage is to get a more comprehensive picture of your customers or your applicants. Will we see a push in regulation, a change maybe to FICRA, forcing people to report those debts? I don't think so. Honestly, if I were a betting man, I don't think we would see that kind of changes to the regulations. But I think lenders do have to be a little bit more aware of the fact that you can't rely on the bureaus anymore, or just on the bureau.
Right, it's not the full picture.
It's not.
All right. Another area that I get questions a lot of, these would be existing customers and clients at Galileo who, let's say a classic neobank who is looking to expand their portfolio and they want to introduce either secured credit or credit products. Can you talk a little bit about what a sponsor bank does and doesn't do in terms of outstandings, balance sheet, etc., and how FinWise might be a little bit different in that case? So I think that would be very helpful, especially for those who are not, I'm going to say, organic credit from the beginning, but want to add that to their portfolio.
Want to take it or you want?
I'll take it.
I'll weigh in.
I think every sponsor bank is going to have a different flavor of the offering that they put out on the market. At FinWise, we're very big on the compliance side of things. We're very big on almost offering compliance as a service to the fintechs that we're working with. But also, I'm very big, and I think a lot of my team is very big on providing business advisory almost to the fintechs that are coming our way. So sometimes we get fintech or use case that is not fully baked out and will help them get to the finish line in terms of product design. And I think that is a very big advantage of working with the bank. You touched on balance sheet, right? Balance sheet is a very touchy topic for all sponsor bank, primarily because you never want to go out and say, yes, I offer balance sheet, and then everyone asks you for it, and you're not able to extend that sort of option to all the fintechs that come your way. Generally speaking, sponsor banks have to be very nimble with their balance sheet because of risk management practices, right? There's concentration limits on a single fintechs. There's a concentration limit on the business line as a whole. So you have to be picky in terms of how you use your balance sheet when you're going to sponsor a credit-based product.
One thing I would add in too is as you're a fintech, and what we've seen from some of our lending and card partners is you start in with an idea, you find your sponsor bank, maybe you find a couple sponsor banks, you launch a lending product, and then you decide you want to have a card program. It's a natural extension. Or you were in a card program and you want to go into lending, individual states or nationwide, or you want to do money movement, and you might consider consumer, you might consider commercial, you might go debit, you might go credit. Think about that as you're getting ready for your initial bank partnerships, and processors such as Galileo are really good at advising. And I think we're seeing fintechs become more bank ready, whether they're doing lending or card or some sort of BIN sponsorship program. And there's wonderful consultants out there that can play the role of program manager for you. So if you're not going to be ready to that, a lot of banks won't go into program management, but there's processors, there's program managers, individuals, consultants that go out there. There's compliance consultants, and all of these we're seeing help the ecosystem. As when we see a fintech, we're saying no probably 20 times before we're even saying maybe when we see a fintech, by the way. But they're a lot more educated than they were a year or two ago. And I think that's a testament to all of us helping get a fintech bank ready, because if they do have a unique program, a great vision, solving a real world need, we do want to see them land with a good bank, whether it's ours or someone else, and make sure that comes to market and gets in touch with those consumers and businesses, provides the services they need.
Great. So how do you see, just one more plan question for you, and then if there are other topics you'd like to talk about and talk either FinWise or industry in general, but how do you see, I think you've been seeding this a little bit, but how do you see the sponsor bank role evolving in the future? You've talked a little bit about maybe even compliance as a service, et cetera, but how do you see that evolving in the next, let's say, 2 or 3 years?
So I think we have to be big on compliance from the beginning. Right? It's our regulators hold the sponsor banks responsible for any action that the fintechs that we're working with take. So I don't think that's going to go away anytime soon. I think sponsor banks are probably learning to be pickier with the fintechs that they're working with, and I can only see getting a little worse for the fintech and a little better for the banks and our regulators. I think there is a big unknown, right? And that more pertains to the future of fintech sponsorship in and of itself. 10 years ago, when I started in this industry, the big talk was the OCC FinTech Charter. And everyone thought that was going to drive fintech sponsorship into the ground. It ended up not to, but we have an administration that is fairly hard to read, and it is becoming increasingly hard to forecast what this administration is going to do. So could we see a comeback of something like the FinTech Charter? Maybe, and that may actually be a real threat to the fintech sponsorship industry.
Okay.
Yeah, and we're seeing more and more states evaluate state charters. I know University of Utah, we spoke with them recently. They said Utah is looking at a state charter. Georgia obviously has one. And we're speaking on stage tomorrow with a couple attorneys, and Loan Pro is moderating. And we had a little prep meeting this morning, and we talked about the political winds and the administration. And so just when you think you're going to sway one way, it's going to sway the next. And so the consistency that is going to remain is compliance and oversight from the bank perspective, regardless.
Yeah,
so
right. You can take that to the bank.
You
no
can
pun
take
intended.
that to the bank. I love that. So if things are swaying this way right now, it's going to sway back. It has traditionally done that. So as long as everybody's not cutting corners now because they think it's an easier path to market, I think we'll be okay. But we still have to keep an eye on the bank is still ultimately responsible for that customer. Even if the fintech is the brand, it's the bank's customer. So we're on the hook. So we're going to do everything we can to make sure that those programs and those consumers are safe.
As we wrap up, is there anything else that you'd either like to predict about the industry, tell us about FinWise, or otherwise comment for our listeners?
Maybe a small prediction on the industry. I think we're becoming more and more mature in a lot of areas, and that's to go back to the pendulum idea that Nick was just referencing. Becoming a lot more mature, but I think our regulators are going to have to catch up on a lot of topics, and it is going to be interesting to see how that whole thing develops in the future weeks and in the future month. Will we get the level of knowledge and expertise that we need from our regulators to understand how the industry is evolving. There is increasingly so the use of black box type models, but they're not black box by design. They're just because of the way machine learning works and how artificial intelligence works. And we're sensing this growing unease from our regulatory bodies of the use of such models, but yet we also feel like they want us to use that kind of models because they're very predictive in certain areas. So I think that whole balance of how do we meet both of those expectations are very conflicting. How is that balance going to be, how it is going to be struck? I think that's going to be very interesting, and I think that's some clarity that we'll probably get in the next couple of years.
Good.
And I would just add the consistency of regulatory oversight of the banks. So you've got a lot of banks doing sponsor banking, and you've got different states that oversee them differently. You've got OCC, Fed, FDIC regulating at the higher level. So just to see some consistency across, if I'm a fintech and I have a program but I have 3 sponsor banks, could be different on each of those state regulators. So I'd love to see some more consistency, whether that's using AI at the government level, but to monitor the oversight of banks so that we have the same message and we're all working towards a similar goal, even if there's multiple different states and regulatory bodies involved.
Gotcha.
You know what I find funny though? Neither one of us are compliance people.
No.
Nick is marketing, I'm product, and I feel like we've spent a whole lot of this podcast talking about regulatory compliance, but I think that should show everyone that this is something that we have to take extremely seriously.
Well, I think I was actually thinking the same thing. I'm like, if anyone has any doubt after listening to this podcast, they will know that banks are focused on compliance. So.
Hey, we have some fun too, though, don't we?
Yes.
Like Simon said, we get to be consultants to our fintech partners and come up with creative program constructs within the boundaries of the law, of course, but being that financial advisor to a bank or to a fintech as they come to us and say, hey, here's a program. Okay, maybe legally it's not perfect. Let's get it legal and let's get it unique. And so playing that role as an advisor, and I know you guys do a lot of that at Galileo as well, which is fantastic, coming up with creative ways to bring a program to market, but make sure it's done in the right way.
Yeah. Exactly. That's where the secret sauce is. Well, thank you so much. I love doing this with folks that I know. So great to actually see you both in person. I know the audience can't see you, but I can. Yeah. And I really appreciate your spending the time with me.
Always good to see you, Christiane.
All right.
Thanks for having us. Bye-bye.
This podcast has been a production of Galileo Financial Technologies with all rights reserved. The content is provided for informational purposes only and is not legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information. You understand that any reliance on this information is at your own risk.